What's going on with the real estate market? Here's what experts predict for the next 12 months. Hi everyone, Mike Tilford here with a real estate market update. This is some exciting stuff, so hold on to your seats. Before we dive into what's going on in the real estate market, it's important to have some perspective by first looking at the economy as a whole. And things are not looking pretty. In the most recent recession in 2008, unemployment insurance claims reached 37 million people over a 2-year period. Today, unemployment insurance claims have reached 36.5 million people over only a 2-month period. This is the largest percentage drop in employment that we as a nation have ever seen. Already, our total level of unemployment within California is over 50% higher than at the peak of the 2008 recession. Some estimates show the actual unemployment rate in the state of California is between 18 and 22%. Retail sales have taken a huge hit as well, with an almost 67% drop in the month of March and a projected almost 77% drop in the month of April. The first quarter of 2020 did much worse than expected, decreasing by 4.8%. Now this number may seem low considering the extent of the pandemic, but you need to remember, lockdowns didn't even begin until the final few weeks of the first quarter. So this is a big indicator that things are going to be pretty ugly in the second quarter with a significant percentage of the economy still on hold. 2020 has already broken a lot of records, but not in a good way. California's 10-year job streak has come to an end. Consumer confidence is at its lowest in almost 50 years, and builder sentiment is at its lowest point ever, just to name a few. With all that's going on, of course, real estate is also feeling the impact. Month to month, the California Association of Realtors performs a study of around 1,000 people to determine the current market sentiment. In the months of April and May, they found that buyers have had an increase in positive sentiment when it comes to buying a home, up to a high of 31% who feel now is a good time to buy in California. Conversely, seller sentiment has dropped considerably from 62% in February who felt it was a good time to sell a home in California to around 29% today. A survey conducted by the California Association of Realtors shows that almost 50% of active agents have seen a seller remove their home from the market completely due to the coronavirus. This seller sentiment can be seen across the state, with active listings being taken off the market. Closed sales have been steadily decreasing week to week throughout this pandemic. This is not limited to a particular price segment within the marketplace either, but can be seen across the board over all price segments. So far, this contradicting buyer and seller sentiment has helped to maintain home prices throughout the state. It's a simple case of supply and demand. With less sellers listing their homes on the market with a steady supply of buyers, home prices have not gone down. And in Southern California, we even see a slight uptick in the median list price over the prior 2 months. Buyer sentiment is likely clouded by the recession of 2008, where the average median home price within California decreased between 40 to 60%. Because of this, buyers in the current market are expecting lower prices now than they were pre-pandemic. However, sellers don't feel the same way so far. The number of homes discounted from the original price has remained steady throughout the pandemic, accounting for about 30% of all active listings week to week. Despite everything that's going on, there is a light at the end of the tunnel. Since the first week of April, the number of active listings has been steadily increasing in most marketplaces. And although we are still below pre-pandemic levels, things are slowly recovering. We are also seeing a steady increase in average daily pending sales since the low point at the end of March, the beginning of April. In Southern California, we are almost at pre-pandemic levels. With all that said, we are not out of the woods yet. Economists predict that the economy in the second quarter of 2020 will drop around 30%, with a slow rebound from there. However, this assumes that there will not be a second wave of the pandemic and that the financial market will not take a second major hit. If things go forward as hoped, we are still looking at around a 16.7% decrease in total home sales for the year of 2020 compared to 2019. And economists predict that total home sales will not reach pre-pandemic levels until the second quarter of 2021 at the earliest. It's important to note that although things look bad, this is not a repeat of 2008. 2020 doesn't suffer from the same fundamental issues that plagued the 2008 crash. Prior to the pandemic, the economy was on a strong footing. Pre-pandemic, many indicators were actually gaining steam in January and February. Home sales, home prices, retail sales, the jobs numbers were all very strong. Today, homeowners on average are in less debt and are currently not as over-leveraged as they were in 2008. Unemployment was also at an all-time low leading up to the pandemic. If you're looking to buy or sell, here are some things to remember. Home prices are unlikely to decrease in the short term due to a strong buyer demand and lower than normal inventory levels. So if you're buying, don't expect a large discount on price. So long as interest rates remain low, there will continue to be a large pool of buyers. Despite all of the negatives currently in the marketplace, housing is still poised to do well in the long term. Rates are at historic lows and could go even lower. The long-term benefit of home ownership is still there and not going away. It's important to note that there has been a major structural shift in the way people are currently working. Post-pandemic, many businesses will likely stick to the current trend of allowing employees to work remotely. This will open the possibility of home ownership to a larger group of people. Those who could not afford homes close to their jobs may begin to purchase homes further away in less expensive areas. After staying home for over 2 months, many people are also realizing how important our homes actually are to our day-to-day lives. Although the numbers look ugly, we're getting to see a bottom. But it's not yet time to celebrate. The market is going to face ongoing challenges at least through June, and more likely later into the year. And although we are not expected to see a full recovery until at least the second half of 2021, at least there is a light at the end of the tunnel. Thanks everyone for watching. I hope I was able to put some of your concerns at ease. And if you found this video to be helpful, please like and comment below. Don't forget to subscribe to my channel so that you can stay up to date on what's happening locally in the community and in the real estate market. Oh, and by the way, I'm never too busy for your referrals.